We have this one to start. It's about Luna, and Luna meltdown sparks theories and told you so's from the crypto community. Some of you saw it coming. Some of you still can't believe it's real. Was the most significant collapse in crypto history an attack?
There's a lot of controversy over how this happened. However, keep this in the back of your mind. We've been saying for a long time that this whole idea of algorithmic stablecoins was incredibly weak and incredibly risky. Well, the Luna meltdown sparked a bunch of theories, and I know, told you so's from crypto community. This is not a told you so because we didn't say Luna was bad. We said Luna is among a host of assets that are bad. Algorithmic stablecoins and under collateralized stablecoins, they just don't work. Now, turns out whole currencies don't work. Actual fiat currencies crash or die in 35-year lifespan. The dollar's got an extended fuel set, but for a variety of reasons. However, just in general, I want you to think currencies only last about 35 years. Cryptocurrencies is a tiny, tiny, tiny little volatile space. So you can imagine that that timeline is tiny. And to me, a stable coin would, if I have a $1 stable coin, it means that it represents $1 of buying power. That's the whole idea. It is stable to whatever fiat currency it represents. A euro stable coin would represent €1 worth of value, and they would be pegged, meaning the value is the same. I can buy the same stuff with a €1 stable coin as I can buy with €1. And there might be a lot of reasons to hold stable coins if they were properly pegged. And then you would think, okay, so how do you peg it? Well, the common sense would be like collateral, right? I would have collateral. If I have $100 stable coin, I would like to have $100 in an account, or equivalence, meaning quality, prime, pristine collateral with no credit risk, meaning bills, notes, bonds, tips, receipts. That's it. So government issued assets with no credit risk, right? That'd be the only other thing, not random paper, unsecured debt, corporate debt, high yield, unspecified paper, wallpaper, whatever. No, those would be like quasi-collateralized. Pure collateralized to me is a stable coin. And then you say, well, where's the money to be made in doing that? Why would you do that? Why wouldn't a government just do that? The answer is governments will do it. And when governments release their fiat-backed, one-to-one, zero credit risk stable assets, there's no reason for any of these things. Now, let's take it one step further into whimsy world. Luna, UST, the group, LFG. And it's important to understand this little triangle exists. You buy Luna, which is a funny money coin they created out of thin air. Terraforma Labs. By the way, real quick, just so you know, the guy that created Luna, he already created Basis Cash a few years ago, and it blew up and went to zero. He's already done this, although that time he used a pseudonym. So it's cool because he just changed his name and it's fine. But he already did this. It already didn't work. It went to effing zero. So keep that in the back of your mind. Second try. Luna is the coin. You buy the coin, you burn that to mint UST. You say, okay, why would I do that? Well, they created another part of this. Actually, it's a square now. There's 4 corners. Now you have Luna, UST, which alone doesn't do you any good because it's just a rando stable coin. But what if you could make a yield? So they created Anchor. Anchor is a place where you make yield. How much yield, you ask? Well, 20% was what they were giving. You say, that's awesome. So I buy Luna, burn Luna, mint UST, which is a weird stable coin with no dollars behind it, but it's $1. Got it. Okay. Then I take those USTs and I put them in Anchor and I get 20%. You're like, 20%? Yeah. Wait a minute. Eric, if I say, I'm going to give you 20% return on your money, as much as you want, what would one of your next questions be?
I'd say, how? How am I going to get 20% return on my money?
Yes, it turns out you're not the only one that asked how. Everyone asked how. And their answer was, step 1, put UST in Anchor. Step 2 and step 3, 20%. You say, wait, I feel like something's missing. Go over that again. Step 1, take UST, put in the anchor. Step 2 and step 3, 20% profit. More and more people started asking, what is that exactly? Step 2 is a little vague. It's a little opaque. And step 2 was a loss leader. They were basically paying it out of their own pocket, out of money that they generated out of thin air from Luna. Now, forget this whole anchor thing because, my contention was always that once they quit paying the funny money 20% that they're manufacturing out of thin air, people are going to exit because why would you stay in it? Because you start to realize, well, it's not paying me anymore. I'm going to go somewhere else where my money can make more money. If my contention was if there's an unwind in the interest rate that they pay, people will leave, the whole thing will collapse under its own weight. I was almost right, but I was giving the world too much credit. I thought it was going to be behavior of investors exiting. Well, we didn't even get to that point. It turns out there may have been some shenaniganery on the part, some Soros-like behavior on the part of BlackRock and maybe Citadel. It seems that they looked at this really obvious Ponzi-nomics scheme and they said, okay, what collateralizes? When the team at Terraforma Labs realized this was untenable, they created the LFG. LFG, bro, let's go. The Luna Foundation Guard. What was that? A place where you park extra money that would then defend the peg. Well, you shouldn't have to defend the peg if your algorithmic system is so succinct and accurate and clear and concise and it works. You know, mathematical integrity. We don't really have that in the Luna UST funny money anchor system. Turns out in that triangle, there is no mathematics certainty. Matter of fact, the certainty is it will collapse under its own weight because there's nothing behind it. So if there's an exit to UST and an exit to go back from UST to Luna, and these two, the Luna and the UST market caps are not exactly the same, you could get to a point where they can no longer, there's no more Luna to generate, to sell, to back the price of Terra. It unwinds, which we saw that last few days. So this guard had taken on a bunch of Bitcoin, about 1.5 billion in Bitcoin and a few other things, but mostly just Bitcoin. There was another sketchy asset in there too, but it was mostly Bitcoin. Well, when the price of UST broke its peg and all bloody panic set loose, which of course it didn't take a mind reader to know this, you just had to look at the math and go, oh, that's clearly flawed. Well, when the clearly flawed thing finally showed its true colors, the peg broke, people started going, oh, and this is the other thing. A lot of people were locked into Anchor and just got to watch their value decrease. So it broke the other day for 2 cents. People were like, uh-oh, $1 is supposed to be $1, not 98 cents. Then it went all the way down into the 60s. And you're like, oh, $1 is definitely not supposed to be 62 cents. That is not right. Then all chaos. People were doing everything they could to exit their UST, to get out of it. Luna collapsed, the price of Luna. Why? Because now everybody's hitting the exit. Everybody's hitting the ask. And when there's a race to the exit, remember, there's only 2 stages of a stable coin: expansion and death spiral, contraction. And so when all this occurred, the guard, they tried to use as much capital as they could, and it got nuked very quickly. They liquidated all that Bitcoin. Well, this didn't help the Bitcoin market having to absorb another $750 million of Bitcoin sales, including whatever, because the guard, not only did it send 750 million to protect the peg, it also took another 750 million worth of Bitcoin and other assets and poured it out to all these market makers so that they could protect. And these were all these weird loans and all this crap. No one's even really talked about that. This whole catastrophe just lit on fire. They just lit money on fire. So some people saw it coming because math, right? And it is now they're calling it an attack. See, Do Kwon will call it an attack because clearly this would not have happened naturally, even though we all know it absolutely would have happened naturally because prices don't always just go up. But I'm going to read a little bit from this article because there's some kind of funny parts to it. But the contention is that BlackRock, and we know that they're kind of dubious individuals, that they looked at this system like we have, and we're just simple mathematicians here. They looked at this and they went, well, that's clearly flawed, Ponzi-nomic, dumpster fire, garbage juice. Well, let's just destroy it. So, and this is word on the street. This has not been proven. And also, nothing I'm about to talk about is illegal. This is not illegal. You might say it's amoral. It's George Soros-esque, but it's not illegal. So it looks like BlackRock borrowed UST for a sweetheart deal, right? The stable coin. They got a bunch of UST, may have gotten some Luna, but they definitely got a bunch of UST. They borrowed it at a certain price, started dumping it. They also started dumping Bitcoin. So these two things made the price of the token drop. When it unpegged, how would the LFG defend the peg? By selling Bitcoin, by selling the only thing they had on their books that has any real value. So they start selling Bitcoin, they start selling UST. Basically, it's a big giant short position they put on. And by selling the asset that LFG was going to use as collateral to protect the peg, there was nowhere for them to run. They had no collateral. Their collateral was shrinking. Luna, the price was shrinking as people hit the exit. So anywhere they looked, there was no collateral left. Had they had collateral in dollars, they would have just dollar for dollar swapped. Oh, here's a dollar. Here's a dollar. We need a dollar. Here's a dollar. They didn't do that because Do Kwon, just like Michael Saylor and all these other people that think they have a crystal ball, they were calling the bottom of Bitcoin at 40,000 because they had recency bias, because they saw Bitcoin at 68,000, 69,000 in November, and they thought, well, it'll go back up any day now. It'll just go straight up. No, dummies. It won't just go. It won't just do nothing. It's price discovery, and it's buyers and sellers with a variety of intermingling decisions to make and crosswinds and needs and wants. And there's no Michael Saylor and Do Kwon don't have it figured out, as it turns out. And so this just created a death spiral, and this thing got nuked. Anybody buying Luna or buying UST now is a compulsive idiot gambler. You're just an idiot gambler. So it looks like BlackRock took advantage of a poorly built system with arrogant fools at the helm. And they knew that these arrogant fools would behave the way all arrogant fools behave, as if they know something the rest of us don't. And the only thing that they may have known that the rest of us don't is how fast this would collapse. Stay away from Luna, stay away from UST, and stay away from anyone that can't explain to you clearly how they generate 20%. If they call it staking, but it's not, you weren't staking anything in Anchor. You're just giving them your currency units, and they were giving you funny money. You're like, sweet, more funny money. But people that asked how that money was generated never got a good answer.